Hi, I'm Gareth Evans and I'm joined today by Jason Paltrowitz from the OTC Markets. Jason, welcome.
Thanks for having me.
Good to have you here. So a lot of UK investors will have heard of OTC over the years. It'd be great to get a little bit of a background on what OTC is and how it operates.
Sure. So, put simply, the OTC Markets is the largest stock market in the US for non-US equities. We operate three markets that cover around 12,000 securities, and those markets are grouped based on the level of disclosure that they provide. At our lowest tier, we have a pink market, which is this open market, which includes security types of all shapes and sizes. And it's a market that simply allows traders to trade those securities. Above that, we have our QB and QX markets. Those are our premium markets, QB being a venture market, so for early stage growth companies, primarily pre-revenue, and then our OTC QX market, which is the top tier of our market. As the largest market for non-US equities, we in essence are a secondary market for international companies that are seeking access to the breadth and depth of US investors, but want to do it in a way that's cost effective with less complexity and risk than a traditional exchange listing on the New York Stock Exchange or NASDAQ. And how one goes about doing that is we have this unique regulatory monopoly that the SEC has provided. It's called the Foreign Private Issuer Exemption, SEC Rule 12G32B, which says that companies that are listed on a qualified exchange outside of the US, if they meet certain criteria and provide their home market disclosure to us at OTC Markets, have the ability to have their shares traded on our market in US dollars during US market hours without having the added cost and complexity of being an SEC reporting, Sarbanes-Oxley compliant issuer. It means they don't have to reconcile to US GAAP. It means they don't have to do anything additional other than whatever is required of their home market regulator. And so we've become this market that allows companies as big as Roche, Adidas, Heineken, Marks and Spencer, all the way down to very diverse group of AIM and Aquis listed companies here in the UK to be able to access into that US investor base without the traditional cost and complexity of a full-on US exchange listing.
So any London listed company can benefit from the US liquidity at almost no incremental regulatory cost, because that would be most companies' worry, or most management teams' worries would be around the regulatory risk or the regulatory cost of being listed in the US. So there's literally no additional overhead over and above what they're dealing with in their home markets.
That's correct. You know, the beauty, if you will, of this SEC 12G32B is that it allows companies, again, all the breadth and depth of access. So you're getting access to, US retail and the vast pool of US retail, self-directed, high net worth investor, all the way to just having your shares trading in US market hours to the large US institutions. And you're doing it all utilizing your home market disclosure. And that is very powerful. It's an incredible tool. Our market really started the basics of this right around Sarbanes-Oxley when that was instituted. And you had a number of companies that were listed on the New York Stock Exchange that saw that regulatory change and said, wait a minute, I've already got expensive experts that understand my UK disclosure or my Swiss disclosure or my German disclosure. Why am I going to put in place infrastructure of an equal number of expensive experts to do US disclosure? And so companies at the time like Danone and others delisted, and we created a market that gave them a place where they could still demonstrate the quality of their disclosure, where they could still meet state and federal securities laws and do all the things that a company needs to do to demonstrate their investability, but do it in such a way that allowed them to be efficient and not duplicative and have that added risk and cost.
Right, makes sense. I can see why people would go for that. So that's great. So one relatively small London listed company, Concurrent Technologies, they announced last week that they were listing on the OTC. And I contacted the chief exec, and he said that for them, they've got a growing business in the US with an increasing number of US employees. And for them, the biggest driver of the move to get the listing on the OTC was actually for employees to exercise their stock options and be able to sell their shares relatively easily in the local market. Is that a common driver for some of these smaller companies to list?
Yeah, companies have all sorts of different reasons why they want to access the U.S. But certainly to the extent, and we have, across our QX and QB markets, close to 2,500 companies that are trading on those. To the extent you have companies that have employees or operations in the U.S., one of the misperceptions of public companies around the world is that just because you're listed in the U.K. or in Germany or wherever it is, that somehow every other investor from around the world has the ability to connect in. And that's just not the case. And so the vast majority of U.S. investors do not have the ability to buy directly into London, sell directly into London. They don't have the custody network, the clearing networks, the currency, the ability to do FX and do all of those things. And so for Concurrent and many other companies to be able to provide a U.S. ticker symbol that is ingested into all of the U.S. broker networks, so Schwab or E-Trade or Fidelity, so that a U.S. investor has a U.S. ticker symbol that's recognized and can do a trade on a U.S. trading platform is really important. And so that helps the employees. But at the same time, you're also opening up your security to, like I said, the breadth and depth of all the other U.S. investors. And so what does that do? That means U.S. investors can now buy these securities that they otherwise couldn't. The liquidity that comes from that U.S. investor actually transports back into London.
Of course.
Right? The companies aren't doing a capital raise. So the only way to source that liquidity is to have it trade here in London. So you're seeing increased liquidity in the home market. That tends to demonstrate in a narrowing of the valuation gap between a company and its U.S. peers. And so there are a lot of reasons why companies would want to access the U.S. And they all kind of feed on themselves.
All works together. I saw in 2024, you had a growth in volume traded, I think of 24% over the previous year. That's an impressive stat. How much of that has come from new companies listing and how much of it is from increased trading of stocks already on the market?
It's a little of both. But when you peel back, obviously we continue to grow in terms of the universe of companies that are on our market. But if you look at the majority of the trading tends to focus on those companies on QB and QX, where that disclosure is being made available. And what you're seeing is, certainly from a U.S. self-directed investor or high net worth family office investor, is a lot of that flow coming in to European markets specifically. The UK has, in the last couple of years, traded at I'd say significant valuation.
That's a different
to U.S.
story,
peers.
You're right. Yeah.
The European market's the same, right? They're not without their own issues. The U.S. has been frothy, and there's all sorts of talk about outside of the top 7 what really is going on from a U.S. valuation perspective.
Will the dispersal trade ever happen? So yeah.
And I think what you're starting to see is U.S. investors wake up to the fact that there is some real opportunity outside the U.S. And again, as the market for non-U.S. equities, I think we're the beneficiary of that as people are looking at those opportunities, and money is being deployed that way.
Okay, no, it's interesting to hear. I saw that you've recently launched an overnight or a late night trading platform cleverly named Moon.
Yes.
And that's, I think, from 8 p.m. till 4 a.m. Do you think we'll ever get to 24-hour trading? And is Moon a step in that direction?
Do I think we'll get to 24-hour trading? Probably. Although I would say I'm old enough that, words like batch processing still
there is that
roll around in my head. So you might need to close every once in a while to make sure things are working. We launched Moon recently. So Moon is our overnight NMS offering. So national market exchange listed securities, if you will. But we've also, in partner with that, have launched OTC Overnight, which will be the same functionality, but for OTC securities.
Okay.
And so this will be trading Sunday to Thursday, 8 p.m. to 4 a.m. We've already signed and connected into a number of broker-dealers. We've put our first 100 securities up on Moon, and we're already seeing trading starting to flow. And then that we'll follow that up with our OTC Overnight offering as well. And so why we're doing that or what we're seeing is in markets like Asia, where there's a significant growth in high net worth retail, is the desire to be able to trade U.S. securities in their time zone, but in U.S. dollars. And so, to have brokers like Futu or Tiger in Hong Kong to be able to offer to their clients the ability to trade, Amazon during their trading hours is important. What makes our offering unique is, unlike Blue Ocean that also has this NMS overnight facility, we're going to add in this OTC component. And so if you think about that, where we have securities like Roche, Adidas, Heineken, Marks & Spencer in pounds, in Swiss francs, in euros, those investors can now buy all of that in a single currency, right? You can get access to the breadth and depth of global equities, but in US dollars in Asian trading hours.
So you're bringing, ironically, to Asian investors the ability to trade European as well as US stocks.
Correct.
Right.
In one currency, which is a unique offering.
I can see why trying to get that going for 24 hours a day would be tricky to...
We're still
arrange.
working out some of the connect. Right, there's all sorts of things that, it's not as easy as it sounds to just say, oh, trade all day. There's clearing and settlement issues that need to be worked through. But as I said, our first 100 securities are now up and running. We're connecting more broker-dealers by the day, and we think it will continue to grow.
So I was impressed to see that you run a billion-plus index. Could you just talk about why companies of that scale are interested in having an OTC listing? I saw some very impressive names: Adidas, BASF, Danone, Deutsche Lufthansa, and that's only A to D. So there's some great names there. What's in it for them?
What's in it for them is they're public. They already have, and I mentioned this earlier, right? They have the infrastructure in place to meet the standards of their home market disclosure needs. They know what Swiss disclosure or German disclosure or UK disclosure is. They have the lawyers and the accountants and all the people geared up to make sure they are doing the right thing by their local market listing. It would be duplicative, incredibly costly, with added risk and exposure to have that same type of infrastructure set up for U.S. disclosure.
Right.
And quite honestly, most of them would say to you, Swiss or UK or German disclosure is just as good, if not better, than U.S. disclosure. So why would I be duplicative in that? And why would I expose myself to the added cost and risk? And so the business was built on that foundation, is that you can have your shares traded in the U.S. by passporting your home market disclosure. You have to be in good standing. You have to make that information available. You have to disclose. You have to meet state and securities regulations on our regulated market. But as long as you do that, you should be able to have access to U.S. investors, and U.S. investors should be able to access your securities. They shouldn't be deprived simply because they're not SEC reporting, just because they're German reporting, let's say.
Right, that makes sense. So I can see the benefits: more liquidity and very little additional regulatory overhead or administrative burden. What about the costs of listing on the OTC?
Well, that's the other beauty of it, right? Because you're not doing anything additional. You're not hiring any more expensive experts to do a U.S. listing. Really, the only cost is our listing fees, if you will. We operate a subscription-based model. On our QB market, which is a venture market, there's an application fee of $6,000 and a $16,100 a year listing fee. And on our top tier, our QX market, there's a $6,000 application fee one time and a $26,600 ongoing subscription fee. That's really the only cost to have your shares traded with us. Now, obviously, if you want to make it work, there are things like investor relations that one needs to think about, and so you're putting costs there. But purely from a publicly traded listings perspective, those are the only costs. And again, there's listing fees, so those are significantly less than the listing fees on New York and NASDAQ. But then if you think about the accountants and the lawyers and the legal and all of that stuff that goes with disclosure, it's a significant savings. The other piece, and this is important because we see companies that, take the decision to list in the U.S. all the time, and then it doesn't work and they delist. Right. There's this concept of deregistration in the U.S. Okay. And just because you've delisted from a U.S. exchange doesn't mean you can deregister, which means you still have these ongoing costs of SEC disclosure and Sarbanes-Oxley compliance. By joining our market, as not being an SEC reporting company, you don't have those deregistration costs either. So those are important things that issuers should think about long term when they're questioning, should I go list on NASDAQ or should I list on AIM or Aquis or LSE, and then supplement that with an OTC Markets quote in the US.
Yeah, I'm sure a lot of the investors that we speak to or that we liaise with, they'd much rather see companies stay listed here in London or wherever they're listed originally and get the benefit of an OTC listing or OTC liquidity without losing that home market investor base.
We have an entire campaign called List Local, Trade Global, where we're telling companies you should be a national champion on your home exchange. You should be supporting your local capital market. The only way to do that is to raise capital locally, to stay public local, to list local. This whole concept that you're going to delist and then join another market tends to not work, quite honestly. The vast majority of UK companies that have done their primary listing in the US haven't seen the significant uptick in valuation or liquidity that one would think. And certainly in the SME space, they tend to get lost. And so we think it's important that home capital markets are nurtured. So the regulators have a responsibility there, but the issuers do as well. And I think all of us working together can help support that ecosystem in all the markets in which we operate.
Yeah. And with, as you said, a relatively low cost and no additional regulation, the OTC can offer the benefits of US liquidity on top of whatever you're getting locally.
Correct.
Yeah. Well, I'm old enough to remember back in the late 90s and early 2000s when AIM was seen as a very successful market by offering a low regulatory regime, offering relatively low cost listing and a supportive and deep local investor base. For various reasons, we've lost that luster. AIM isn't necessarily delivering all of that at the moment for reasons that we go into separately. But I can see that OTC definitely is. So I'm not surprised to see the success you're having. It's been great speaking to you. Thank you very much for your time.
Thank you. Appreciate it.